Hello traders, this is Rich from TradeSight. This is a look at the market preview for the coming session. This is going to be for Friday, January 12th, 2013. The past session we had a fairly strong session with the markets up across the board on all three sides with the ES and Q and the Dow Jones Industrials higher on the day. The market internals were also very positive for the most part and really kind of left little bite for the bears to take after today's session. So let's take a look at the ES futures and then look at the other major futures charts and also the market internals. Okay, so here's a look at the ES futures. The ES futures gapped higher on the day and did expand a little bit on the session. A couple key takeaways here. We did make a new closing high on the move. Our closing high was higher than any close previously on this move, but we did not exceed the intraday high. Intraday high is in that 1687 area, so that's going to be the next area of resistance. To the downside, we've got a gap window here from this day's session. So the lower fringe of that gap at 1670 will be the first portion of support. The second will be about 1649, where the previous day's settlement sets up. Alright, so here's a look at the NASDAQ futures. The NASDAQ futures kind of blew through that 9-bar setup to the upside. We made a new intraday high on the move and also a new closing high on the move. And we settled above the 2-ace level, the plus 2-ace level at 3,046. This will frame shift the GAN box to the upside and kind of relieve the pressure from the oversold levels here, since we did make this new high on the move and exceeded the plus 2-ace levels on a closing basis. Internally, the market made a strong move on the NASDAQ side, especially getting back up into this regression channel. You can see the nice linear move on this last upswing here in the cumulative advanced decline line on the NASDAQ side. That's the lower chart. So that's definitely very positive. The broad market side, measured by the New York Stock Exchange cumulative advanced decline line, is still kind of struggling along here and well below the previous trend line. All right, folks, take a look at the multi-sector daily chart. You can see that the most of the averages were positive on the day as far as the different sectors go. The real standout, though, was the weakness in the BTK. BTK was strong, but the BKX was very, very weak on the day. BKX is pulling back off of a very, very strong move to the upside here and starting to retrace quite a bit. Here's a little better look at the banking index, the BKX. This is individually now versus the overall broad market represented by the SPX. You see the SPX is up in the area, challenging the prior high, but the banking index is starting to retreat now. The banking index retreating is okay as long as we get support from the later cycle sectors. That would be the transportation indexes, the energy stocks, and also the commodities themselves. So this is okay as long as we see these other sectors really starting to lift their weight. So let's take a look at the individual sectors and see how they rank today. All right, so here's a look at the sectors ranked from best to worst. You can see that the top gun was the XAU, gold and silver, followed by the housing sector index. And then you'll start to see some other kind of middling sectors here. The Amex oil sector was stronger than the overall market. But the one thing that's kind of a concern here is the OSX was very, very low on the list. Definitely outperformed the broad market, and so did the BKX. So the banks plus the OSX underperforming is definitely not exactly what you're looking for here. What you really want to see is you want to see the transports up at the top of the list. You want to see the oil services near the top of the list. If the banking index and all those early cycle stocks are going to be weak, and unfortunately we do not have that condition today. But let's take a look at the well, unfortunately anyway for the bulls. So let's take a look at the individual charts and see what they have to tell us. All right, so here's a look at the XAU. The XAU did close very significantly above the 10 EMA. So all we need to do now is follow through above the prior day's high on the closing basis and we'll have confirmation that we're now short-term positive. If that happens, this 100 level will become in play. That's the 4-ace level on the Murray Math box, and also the 50 DMA. BTK was also very, very strong on the day, pushing up into that 2-ace level on the Murray Math box at 21.25. There's really no pause after that 1 through 9 setup phase minimum completion, so now we have to really respect the velocity of the trend. The MACD is definitely positive above the 0 line, which always has momentum, so we have to see if we can keep this thing moving positively. We've got a decent amount of room before the prior high. The utilities index was also strong on the day, trying to break out of this head and shoulders bottom. Here's your left shoulder, here's your head, here's your right shoulder, and the cursor right now is at the neckline. So we've broken above that. Expect the 50 DMA to start to be gamed here a little bit, but this is definitely a fairly decent looking pattern to the upside here. We don't talk a lot about the cyclicals, but we want to talk about them today because we're retesting that 8-ace level here, which is very important. This 1250 level is the prior high where price repelled from before, so potential double top, and we want to make sure that that is not in the cards for that key sector. The OSX is still having trouble here with the 8-ace level at 265.5. This is always a major level. Couldn't get through it on this attempt. We actually closed in the bottom half of the day's range, which is negative. If we close back above this area and make a new high close on the move, then we can start to build on that and talk about the higher levels here. The plus 1-ace level at 269.5, and then 273.5 at plus 2-ace. The BKX index was the last laggard on the day. We've got the 913.9 in place, with the risk level still in place here at 65.5. So this is still definitely a headbanger. All right, looking at the oil futures here. We're starting to get repelled here. We have a potential king and queen pattern here. We have to see how these last two candles play out. Today's candle is very immature. We just started the session, so this is going to be very important. We're a little bit overbought here, but the real resistance doesn't come into 112.50, which is that 8-ace level. Near-term support is going to be this 5-ace level, which is 103.125, which is going to be roughly coincident with the 10 EMA when that catches up with it. The gold futures today were, obviously hanging in there because of the relatively good performance from the XAU and the gold stocks. We're above the 10 EMA and the 8-ace level, but you can see we got this first close above it, but today was an inside candle, so we haven't actually qualified yet to confirm that break above the 10 EMA. So we're going to have to stand by to see if we get confirmation that we do have a change here to short-term positive in the gold futures. All right, folks, as always, thanks for listening. This has been Rich from TradeSight.